It's a pleasure to welcome on stage. We've got a fireside chat with Amy Oldenburg, Head of Digital Asset Strategy at Morgan Stanley. Okay, these are the big players, the incumbents of traditional finance that are moving into this space. You think of it like the crypto space, and the innovations of the crypto space are well over 15 years in the making. 2008 is when Satoshi put out the white paper, the Bitcoin white paper, and look where we are now. We're in the Louvre. Okay, I remember the days actually when it was little sort of rooms in universities and stuff like that with just some guy in a t-shirt and shorts and stuff like that. It's completely changed. Okay, now to speak with Amy, we also have Cody Carbone, CEO of the Digital Chamber. Cody's an expert at being able to communicate the innovations of the crypto space to Capitol Hill, to regulatory bodies, to all manner of different people. So guys, honestly, stick around, please. A big, huge round of applause, come on, for Amy and Cody.
All right. Good afternoon. It's great to be with you. As Brian said, I'm Cody. This is Amy.
Nice to see you again.
Good to see you again.
Last time we chatted was in DC at your conference a couple weeks ago.
Yes, and now we're in a much better venue. We're in Paris. It's hard to beat Paris. 2 Americans in Paris. We talk a lot about U.S. legislation. That's what I do every day, as Brian said. I'm in Washington. I'm talking to the White House, to members of Congress. Even at this conference, I've noticed a lot of the conversation has been focused on the Genius Act, on the Clarity Act, but we're sitting here across the ocean in France. Morgan Stanley is global. Why is a global system for digital assets the real end game? Why do we need to have this conversation be more global than so, for us, American-centric?
It's really interesting, and it's one of the reasons why it's so critical for our organization to be here, not only in Paris, but also in other, to continue to take time in other cities, at other conferences, if that's in the Middle East or in Asia, because to your point, it tends to be very regionalized. Even we see many of the companies and many of the builders be very regionalized. As we're looking for partners to work with in the space, we find, you find something very exciting about their company, and then you start to ask them about licenses and where they can operate and where their entities are. And that becomes a bit of a limiting factor in many cases in this space. And one of the things that we want to do is continue to modernize the global financial system, global financial infrastructure, but we keep hitting some of these roadblocks. If it's regulation, if it's what that kind of impacts in terms of some of the builders, and it puts us in a place where we have to continue to piece this together. So anything that we can do to improve that sort of infrastructure, that system, the coordination, the discussions, we're all for it, because for all of us that operate in a global market environment, we have to figure this out across the globe.
And how do you think we tackle some of those roadblocks? I mean, whether it's regulation, it's liquidity, institutional participation. I agree with you. I mean, this technology is borderless. There needs to be more coordination. How do we start to find some solutions?
I mean, really, we need to continue to get around the table. We were having a couple discussions earlier today with different folks that operate in the industry, both in the traditional finance side and the DeFi side, and we were saying, how do we get enough network effect? How do we get folks to really commit to the consortiums and move and invest to get things off the ground? it's tough, right? Everybody's waiting and watching everyone else to do it. And hoping that once something gets off the ground, then they'll get involved, right? And we all know how that works. Like then when that happens, you needed the infrastructure and technology yesterday, and by the way, it'll take you 2 years to build. So somehow we have to continue to get people in a safe environment where they feel that they can work together and try to move this forward. So I think I actually feel very different this year than I would say in years past in terms of that happening. I think there's a realization. We've been talking about even the conversions, so like the crypto native community coming a little bit closer, adding services to their operating environments that look a little bit more like the traditional finance world, and traditional finance coming a little bit closer to the crypto native space, looking at some of the technology for things like tokenization, stable coins, and so forth. So I think as long as you continue to have that go forward, I do think there's promise, and I feel pretty good that we can deliver something and hopefully continue to create momentum this year.
And I think in creating those safe spaces, in trying to move the convergence along, you and Morgan Stanley have done an incredible job, because I think people, it's a trusted name, it's a trusted brand. I know from just my like very narrow regulatory lens, when I go in and the lawmakers have heard like, oh, Morgan Stanley is offering this type of product now, is getting into the Bitcoin space, that has changed the conversation. Have you felt that?
I wish it was as easy.
Yeah.
I can't tell you that it was that easy. I mean, we've lived through, I've been doing this at the firm in different versions of working groups and innovation councils for probably going on 7 years in different capacities. We've lived through a number of different eras within the digital asset space that have continued to change and create volatility even with where to put your chips. And that's been a challenge, because management always wants to know what's your strategy, what's your plan, where's our priorities. And the hard thing about this space, especially if you really want to deliver on the promise of the technology, is you can't just do one little thing. You turn one thing on, and it basically has a pinball effect that like impacts all of your systems, all of your support groups, all of your policies, all of your risk profiles, and that's quite a substantial undertaking. I think one of the things that we almost had as a headwind for us beyond regulation was the entrance of the AI topic that came into financial services a few years ago. It took all the oxygen out of the room for digital assets. Digital assets was not having a good moment at the time when AI kind of walked in. And it's been, I think we've been fighting that uphill battle just in terms of bandwidth and resources, even hardware, when you want to build out new infrastructure in this space. So, that's all things that we still will continue to be challenged with as we move forward in the build out.
And I think just your internal examples of trying to get Morgan Stanley comfortable with this is a good illustrative example of how other institutions can do this. It may take time. There's no silver bullet, but you were able to get there. And now I see Morgan Stanley in crypto publications every single day, it feels like.
We launched our Bitcoin ETP last week, so that was a huge initiative for us. I think it's interesting because we had a hard time even touching any spot crypto assets for a long time. We're still somewhat limited in what we can do there, and we're working around the regulations around that. Hopefully we'll see a little bit more come out of your neighborhood soon that might help us out there, at least in the US. But it goes back to your larger question of how do we get the flywheel effect going, more so not in just one jurisdiction, but more globally, which is really what we need to focus on.
From the global perspective, and we talked about it, we're both Americans sitting here in France. Are you seeing jurisdictions that are doing it really well in terms of alignment right now? Like, how is the US and the EU in terms of alignment, or is the EU and APAC doing really well? Is there any good examples out there we can point to, or is it still all pretty nascent?
There's nothing that comes to mind. I'd be curious if you think there's anything. I know you just kicked off a partnership with another association to try to make that happen more. But I think that's a good example of where we need to see more of this happening across the board to really bring groups together and hopefully be able to like at least offer some passporting or some efficiency across the regions too, because I think that's the one thing. There's also another outcome here, which is you make it so difficult to operate that permissionless, unregulated DeFi wins. That is possible. That is a possible outcome. I think there's arguments in the space that as much as we want to, if we can't figure out how to make it happen, it will perpetuate, maybe not in developed markets as much. I mean, traditional finance will still operate within their space, but just coming from even the world, I grew up in the emerging markets world. I ran our emerging market investing business for a very long time before moving over to spend 100% of my time on digital assets. And if you think about some of those environments where they still have very underdeveloped financial infrastructure, you know, they have a huge percentage of the population. It's where a lot of the growth is coming from in the world. It's where there are no other options in terms of that financial infrastructure. So I think even when we look at some of the tokenized products that are coming out there, they're not for Americans. Yeah. They're for the international marketplace that can't get access. So that's a very real, and maybe we see a path too where both develop at the same time, and we should be realistic that that's also a possibility.
And the fragmentation can be very detrimental and scary. We see it at a smaller scale in the United States, just from the state level to the federal level, and what fragmentation can do for business in a negative way. How do you see the role of institutions like Morgan Stanley, traditional financial institutions, in trying to address and resolve some of that fragmentation, whether it's globally or even domestically?
Well, I mean, there's two things that come to mind on the back of that question. One is we can understand the ecosystem better. We have a lot of specialists in a lot of different arenas, if it's financial services product, if it's technology, and really advocate for some standards and some ways forward with many of our peers in the space, which I think would be a positive effort overall. I think the other thing, just in terms of making sure we can get progress going, is what were we just talking about? Sorry, I'm a little jet lagged.
So fragmentation.
Fragmentation.
Yeah.
Fragmentation. I think another thing too is just making sure organizations like ours can also potentially have opportunities to offer new services if we do see that fragmentation perpetuate itself. I mean, that's one of the things that we've done in the traditional financial markets to date. There used to be many exchanges, even in the U.S., that we dealt with, and that has totally, we don't even think about how many exchanges exist in the U.S. because it basically is all seamless to anyone who trades there. So there is an opportunity for us to potentially have new revenue lines or new services that we can provide to the industry to bring any of that fragmentation back together.
So when we talk about policy, it often moves slower than markets. I feel it every day in D.C. Policy is slow. The legislative process is slow. And in the U.S. this year, it's been quite fast for the crypto space, historically fast. But globally, it's still fairly slow.
Has there ever been another regulation that's moved as fast as this has?
Never.
Okay.
Never. I mean, for like the Congress to come out and say, whether it's Genius Act or market structure, we're going to prioritize that at the gate, it's been incredible. And the SEC is moving almost too fast for my liking. But are you seeing, as the policy globally can still be quite slow, we don't have market structure yet, are institutions now, with the maturity of the industry, feeling like they can continue to build? You mentioned internally, like regulation starting to get going was one of the green lights for Morgan Stanley to get involved. Institutions are still building and are ready to test or innovate on new products as policy is still trying to keep up.
Oh, 100%. I mean, and I think that's been one of the things that's very different that I've felt this year, is just that opportunity that in some ways it's interesting, because I was getting a lot of questions over the last few weeks. I mean, it's gotten a little bit better this week with the recovery in the Bitcoin price and the crypto markets generally. But earlier on, they said, are you still committed because of the bearish markets that we're living through? And in some ways, it's a bit of a relief because when we're over 100,000 US in that Bitcoin price, trying to build in that environment is very, very challenging. And you just feel like you're up against the clock and there's so much FOMO and people want it yesterday. And so if there's a little bit, even if, I mean, I agree with you, I don't think in our environment we're used to regulation moving so fast. Yeah. And so that's something that we've had to recalibrate to actually they can move regulation forward, and actually this does happen. And even with Genius Act, we're going through rulemaking now, and that will come into action January of 27, I believe, right? Yep. So, you kind of also have this dynamic where it's like, oh, well, we can't touch it yet. And it's like, you better count your days and make sure you are spending every day you have to build and be prepared for it. Because if you wait until January of 27 to start like preparing the infrastructure, it's going to be a very difficult environment. So I think we're trying to make sure we have that right calibration and buying ourselves some time. So, even if we, depending on what we see here, if things slow down I mean, you probably have a view on Clarity passing, but I'm just going to go with the neutral. If it passes, great. If it doesn't pass, we'll be fine, and we'll continue to build, and we'll do things in different ways, but we're moving forward either way.
You mentioned you just launched your Bitcoin ETF last week. Congratulations again. Where are you seeing the most institutional demand? Is it still on investment opportunities? We get asked this question from regulators every single day. Like, where are people wanting to put their money in the digital asset space?
A lot of it's still coming from the retail, but you have to understand that the retail business these days, there's retail clients or private bank clients, ultra high net worth clients, that are bigger than institutions. And so there tends to be a little bit of a hybrid world that does exist at a certain point where the ETPs are being used by retail clients. But in some cases, and one thing that surprised me, not only with our product, I'll talk about like the whole industry in general, is the ability to in-kind spot crypto assets into the ETPs. Again, coming from an emerging markets world, and I've been, even prior to the ETPs launching back in 2024, or here, even prior to that, I was always a believer in the bearer asset because of the markets that I came from. But now I can really understand where many of the clients that we're seeing, they want that central management. They want the financial advice and or the other capital market services that we're able to offer them if they move some or all of their spot crypto into the ETP. So the in-kind, and again, it has some, you can move that in without a taxable event, which is also quite an interesting opportunity for many folks. That's been a big driver of it also. I do think there's still an opportunity for institutions. I do think they're trying to still understand where that fits into the broader asset allocation. But we need more of everything. There's still not that many folks writing research on where Bitcoin or any other crypto assets broadly fit in to portfolio construction, to asset allocation, more on tokenomics to really understand like the underlying technicals of some of these protocols and the projects out there. You can find it, but we need to normalize that and mainstream it a little bit more, and then just continue to educate. And I think that'll happen over time.
We're almost out of time. The last questions I have are more just a thought exercise because I'm fascinated, and I like to hear from you. If we're having this conversation in 2030, what do you think we're talking about? Today we're talking about the convergence, that institutions getting more involved in digital assets. Sitting here 4 years from now, what do you think is the top topic at this conference?
I mean, hopefully we can get more, we can bring some of these real world asset projects online, see more tokenization broadly. I think you'll see more convergence between the two markets. I really am interested in some of the DeFi lending protocols out there. I think there's new models of lending that we could see. And I think there'll be continue to be just further convergence between the technology that exists in the crypto native space or the digital asset space and traditional finance. And the more those worlds come together, I think we can have some really interesting products and actually continue to have some real scale in some of those products also.
Do you see the two worlds today? I know we're all hoping for this convergence and we're seeing it, but do you see the two worlds today as competitive?
It may end up not being a competition. It may just kind of fall to the back end. I think, again, we're early adopters of the technology. So it's similar. So before I joined Morgan Stanley 26 years ago, I worked at a firm where we set up the first internet presence for Fortune 500 companies in the US. So we built their whole website. We, like, if they had any sort of marketplace online, which was almost like non-existent back in the late 90s, it was tough, but we had to talk about the technology all the time because it wasn't easy to engage with. I can see a model that's very similar here, where a lot of this just falls to the background, and hopefully we can create strong UI where we're just offering better customer experience and customer products on the front end. And this will just be efficiency that exists on the back end. So, you know, we're just part of the group that's setting this up, so we talk about the details way more than I think we will in 2030.
Ladies and gentlemen, one of the leading voices in the digital asset space, please join me in thanking Amy Oldenburg, Head of Digital Assets at Morgan Stanley.
Welcome to Signal Week.